Stock markets in Europe are trading on the soft side this morning, with the UK's FTSE 100 index currently down around about 17 points, while the Euro Stoxx 50 index is lower by 5 points. In the commodity space, gold is down around about $17. Oil prices are retreating, with Brent at around about $111 per barrel. In the currency space, the dollar is a standout winner, and finally in the peripheral bond market space, Italian, Spanish and Portuguese bond yields are behaving themselves. Core government bonds, German bonds and UK gilts are in a bit of favour at the moment. Good morning, I'm Ishaq Siddiqi and welcome to your daily market. But I'm going to give you a quick idea of what's going on across financial markets today. So we are experiencing a bit of weakness in the European session. We had a pretty downbeat session in Asia that's given us, that set the tone for us this morning. Now, the reason why we are not feeling too confident this morning is because we have this Federal Reserve policy meeting in next week, where there's a likelihood that the Fed may initiate the first round of tapering. If that's the case, investors are quite hesitant to put all their chips on the table just right now. They would rather wait and look out for more developments and adjust their asset portfolios the way they need to do it in order to get ahead of the Fed and make the right move and not get caught on the bad side of any sort of tapering activity that we do see. We have economic data out from the US that's going to give us further insight as to how the Fed is doing, how they're thinking. We have jobless claims and US retail sales data, which are all eagerly awaited by the market. When it comes to some of the other things that we're looking at, we have some UK construction data, which was pretty solid, rising 2.2%. We also had Eurozone jobs data, which is actually a bit better than expected. The rate of decline in the Eurozone is actually not as bad as feared. And finally, in other news, Twitter has put out its intentions to float in the market with an IPO expected somewhere toward the end of the year. Now, Twitter, according to reports, is worth some $10 billion, could be up to about $12 billion. We don't know yet. There's been no indicative price range, no real kind of understanding of how the company is going to monetize itself, run itself as a sustainable business. So there's a bit of concern on that side, but nonetheless, it is a big name. It is following the trend of a lot of these online social media companies that have listed on the market. We've had LinkedIn previously, Facebook, of course, last year, which is huge, and now Twitter. Is literally at the moment going to stay quiet for the next 21 days under this rule called the Jobs Act in the US, which allows them to, if you're a company generating below $1 billion per year in revenue, you're allowed to stay quiet on your finances for about 21 days until you have to start disclosing that. So that's what Twitter's doing at the moment. They're quite quiet. They just only sent one tweet out to give out their intentions to list. On the back of that, we think that it's a good idea to provide our clients the opportunity to trade the grey market listing, which is exactly what we've done. We've listed it on our platform. You can look it up and start trading the Twitter IPO ahead of the actual debut. We've put our spread between $10.5 billion and $11.5 billion. And you can get involved as soon as you log in and have your chance to actually see what's going on with Twitter and keep an eye on that before the IPO comes out. We'll be giving out updates on the amount of demand that we're seeing on the back of our grey market listing, and at the same time, any more additional information that we get from Twitter when it comes to news flow. Other than that, not much else to say. Enjoy your weekend. Thank you for watching. Cheers.